on Substack and YouTube. Welcome, Satishan, to the podcast today. How are
I'm
you?
fine. Thank you for having me on, Colin. It's great to meet you, and it's great to be on this podcast.
Thanks for coming on, and thanks for you're in the UK, so you're coming on at night. So thank you for coming on. I'm going to give you a quick intro, real quick. Satishan is a UK-based retail investor who writes a deeply researched long-form investment analysis, and it goes by the newsletter on Substack Alpha Monk. I recommend everybody subscribe to Alpha Monk to get his newsletter. Again, deep dive analysis on tech stocks. In 2025, he returned roughly 60% on his portfolio, including exiting Palantir and Robinhood at 500% gain. Is that
Yep.
correct? He's been transparent about both his wins and his painful crypto drawdowns. He currently holds a diversified book spanning from ETFs to Indian equities to other assets like probably Bitcoin and gold. Plus, he also has ETFs and defense and uranium. Um, so, I think the first time I saw one of your posts, it was on Netflix and how you were kind of bearish on the acquisition of Warner Brothers Discovery. I said, hey, I disagree with this. I think Netflix is a buy down here. I would have been wrong because I'm down $8 a share since I wrote that. And you said, yeah, I'm not really that bearish. I just, I'm waiting. Kind of like you're undecided on that. But what I want to talk to you first is a little bit of your background, real quick, so people can understand maybe like where you're coming from. Where have you seen um, things that maybe I haven't seen in the tech world?
Oh, okay. No, thanks, Colin. So by way of background, so let me just take a personal journey. Born and brought up in India, right? In the southern part of the country, close to a place near Bangalore, which is the Silicon Valley of India. Personally experienced the transformative impact that technology had on the economy of Bangalore and the economy of South India, and overall the economy of India as such. I did my MBA from a top B school in the country, and that was 2000, 2002. My first job was with Coca-Cola. So I basically started my career at the beginning of the dot-com boom, or at the end of the dot-com bust, because however you put it, right?
Hmm.
Those were the days when a lot of money was being pumped into anything that had .com at the end of its name. And although I started my career in Coca-Cola in the sales, that gave me an insight into how retail sales operates, the sales operations operate. But in Coca-Cola, I was specifically doing a sales systems manager kind of a role, trying to bring in distribution systems in a very disorganized and unorganized market like India. And over time, over the last 20 years, that has become my forte, right? Organizing the unorganized sector within a company, right? Moving companies' processes from legacy manual-based processes and pulling them and yanking them from the Jurassic age into the digital age.
Kind
So
of
right,
like tech consulting.
yeah, tech consulting, and I was working for big global service integrators like IDC Infotech, Cognizant, and my clients spanned British American Tobacco, Phones for You, which was a small startup in the United Kingdom, the Lloyd's Banking Group, a number of Fortune 500 companies, and the key ask there was implementing their first versions of systems of records, the CRM systems, the precursors of Salesforce, the precursors of ServiceNow, the precursors of Workday. That's what I was spending my time implementing. And then the great financial crash happened in 2008. I was in England at that time. And things became a little more tougher, and people and companies started tightening their belts in terms of spend. But there was another massive technological shift that was happening in the world, which was cloud. Amazon had just found a way of monetizing every aspect of its balance sheet, right? It said, I've got assets on my balance sheet, I'm going to monetize them, I'm going to rent them out, and I'm going to make them into revenue generating units. So cloud became a big thing, and moving into the cloud became a massive investment for many companies. In that process, as we moved to the cloud, the advent of the iPhone, smart technology into people's hands, that made that information was now available at people's fingertips more than at the corporation's fingertips. Earlier, technology was, the bastion of corporates.
Enterprise.
And enterprises. Then suddenly, with smart technology, people started getting that. What do you call? I wouldn't say information asymmetry is not the right word, but I would say getting more. Um, I'll get the word. Empowered. I would say empowered with the information.
That's a good one. Yep.
An example is for London's transportation network, Transport for London. Only the operations teams of London knew which trains were going to be delayed at what time, and they knew they had the information. And it was an age-old system in which they used to get that. But then one of the things of London, Transport for London's mandate was they had to federate the data to everybody so that everybody has the data and they could plug their data into their own systems. So there was an advent of the small kind of startups who didn't have the operational unionization of these Transport for London. They came into the picture and they started using the data and started giving people information about departures on the buses, on the trains, faster than the operational staff themselves understood it and knew it, right? So,
yep.
So at that time, one of the big projects I did was transforming London's operations from being behind the screen, behind the desk, front office operations into bringing everybody out into the open, closing down the ticket offices, and empowering around 12,000 to 15,000 operational staff with literally an iPhone and an iPad, and bringing operational apps. So that kind of digital transformation. And those, over time, that digital transformation has continued, and I've moved on from Transport for London, done big pieces of rostering solutions for Royal Mail, again, digitization of their manual rostering processes, then integrating technology stacks which was driven by acquisitions of PE-led firms, and of late translating small and mid-sized technology product companies and bringing them into the agentic AI age or into the SaaS age. That has been my journey. And in the process, I've learned a lot about the companies that were driving this kind of change and this kind of transformation. And my journey as investor started way back in 2010. But at those days, I was not doing these kind of deep dives. I was like, everybody's on AWS. I should buy Amazon. Everybody is buying ServiceNow. I can see ServiceNow. Let me invest in ServiceNow. To be fair, I was lucky in so many of those investments. I was lucky, right? In fact, I should say I was luckier than I'm lucky after doing all the analysis, right? So after doing all the analysis, I'm now able to say no confidently.
No, a lot of it's timing,
and that was timing, right? I wouldn't say that there was any genius involved in that. It was just timing. I was riding the wave. So that's kind of my background. Typically, transformation DNA, transform companies, moving them from A to B, using technology to do the transformation, and working with a lot of stakeholders to embed the change within those organizations and make sure that they stick. So that's kind of my background. Hope that covers it.
Yeah, that's good to know, because if you have two strengths and you combine them, I think that's really important. Someone that's an expert on tech, and then someone who becomes an expert in, say, investing. That's where the big bucks are, as if you know like two things. But what I want to do is kind of talk about your holdings, because that's the fun stuff, your portfolio. 60% return in a year is crazy. I guess we want to kind of get an idea on how you timed selling Robinhood and Palantir, up 500% late last year, I'm guessing, is when you probably took profits. And did you exit completely? What made you exit in those names? I think we should take one by one, because they are such complex, multi-hundred billion dollar companies. So, Robinhood's kind of like in the news now. Kind of want to get your feel on why you bought Robinhood, and why you sold it.
Okay. So let's go to 2025, like a year in review, which I can talk about. So 2025 definitely was like riding a roller coaster, no doubt about it, where I felt I designed half the track myself, with some brilliant engineering and also some catastrophic miscalculations, right? So my big US stock positions were ripping at the time. India was not much on fire, but it was doing well. And kind of middle of the year, I was up 40% nearly. Then Q4 was, after the October highs, the drawdowns were pretty much gut wrenching, right? The emotional swing from, I'm a genius now to, I might have made a massive mistake was quite humbling. Let's talk about the two exits. In fact, there are three exits, Colin. I think there's Robinhood, and there was also Coinbase, and there's Palantir. Robinhood and Palantir are exited completely. Coinbase, I still hold a position. So both Robinhood and Palantir, I kind of entered it at a time when they were, hovering somewhere around that $10 to $20, $30 mark range. That was where I did a lot of my entries.
Which one, Satishan?
Palantir and Robinhood.
Okay.
Yeah. Somewhere between 2023, 2024, those were the slow dips into the market. And the Robinhood story was pretty exciting because their mission of democratizing finance really stuck with me. I was also using at the time there was no Robinhood in the UK. Now they've got Robinhood, but at the time in the UK they were trading a share was like each trade costed you like £10, £7, £8, which is like nerve-wracking. So you couldn't afford to buy one. And I think there was a time when I was looking at Amazon stock, it was trading at $2,000 or something, and then buying just one share means you had to spend $15 to buy the share and like $15 to sell the share. So you really needed, even if you didn't do anything, you needed to go up to $2,030 to even break even, right?
Yeah.
But then a few upstarts came out. There was a company called Free Trade which started giving commission-free trading. And then when Robinhood started this, heard about Robinhood in the United States, I thought United States is a huge stock trading market, and what Robinhood is doing is definitely going to be. They're going to ride the secular trend wave. They're going to catch the imagination of the young digitally native crowd. And I think they went big during that meme stock frenzy of GameStop. I think that's when it became quite famous. And what impressed me during that time is I think they were also caught off guard, right? I think they were criticized a lot for some of the actions they took, but they came out of it on the other side pretty much well, right?
Yeah.
And my thesis was basically I said if they were to capture based on their assets under custody, I said if they captured, and if I did the mathematic of how much revenue they would earn based on the assets under custody, and I also did a slightly more complicated what could be the market cap be as a value of their assets under custody, and I said okay, if they manage to get so much, then they'll definitely 5x or 15x from here, and that was during those $15 to $30 stage. And at one point, I think it hit 150. And I thought, no, it's reached my thesis very quickly now. It's come to fair value. And the question I asked at that point in time is, would I buy Robinhood at this price? And for me, when the answer said no, I said, right, it's time to take this position off and wait for way to enter back in again. See, in these days, I mean, if you are Buffett says, for us, the holding time is forever. But I think that philosophy probably needs to be modified in today's age because information is so quickly available to everybody now, and the volume of trading has also gone up, and you do not, and technology is growing so rapidly, you don't know, there could be another Robinhood that's growing there that can completely upend its market in 2 years' time, right? You don't know that.
Well, I think the very important aspect to your writing is that you said, hey, like sometimes, if I took profits and I was up 500% on the stock, that's actually a form of compounding because now I have that cash sitting there and I can put it to work during another, market dip or something.
Exactly.
Yeah.
Exactly. And it's a similar story even with Palantir, right? I think with Palantir, I think I waited till it went, I think the moment it hit around 180, maybe, I think that was the range. And then between, I think I wound down the entire position from between around 160 to 180, I wound it down and I said, right, okay, you know what? I need to trim this down. I need to bring it down, and I need to deploy this cash somewhere else. Because again, the simple question I ask is, will I buy it at this price now? If my answer is no to that, then I'll say, sell it.
Yeah.
Coinbase too. I went into Coinbase. I accumulated from uh, 2023, I think, and that again, I think probably from I remember buying a few stocks at $30 to $40, but then I made bulk of my purchases in the $125 range. And my thesis was very bullish. Thesis was, this can hit $1,000, and I think it can. But the one equation that Coinbase always has, its market cap seems to be always tracking the Bitcoin market cap or the crypto
Yeah.
cap, right?
Yeah.
And my thesis was built on the fact that I want to see the divergence from the crypto market cap. If tokenization is improved, see, the ETFs are slowly tokenizing on Coinbase. There are people who are trying to tokenize hard assets on Coinbase, but that is not being reflected in the valuation, or that's not being reflected in the revenue. So when
No,
it
it's
hit
not.
450, yeah. So when it hit $450, I should have sold bulk of my position then, but I was a bit greedy and I kind of blindly went with my thesis faith. And then it started dropping. Then I started winding down my positions between 375 to around 400. I sold 90% of my position, but now I've still got a 10% holding, 10% of my original position left in Coinbase still, because I still believe in the tokenization thesis.
Okay.
But Coinbase is still not diverged from its Bitcoin or its correlation with the crypto market cap. And sometimes I feel that now when I think about it, retrospection, hindsight is a great thing, they say, right? And I like the regulatory first approach, right, which Brian Armstrong very strongly advocates. I don't know now, but I'm thinking on the other side whether that regulatory first approach that he's advocating will come back to bite them. So is he
Yeah.
paving the way? Is he the first mover and paving the way for others to just come nimbly and take over the tokenization game? See,
Yeah.
Apple's a multi-trillion-dollar company, but they are never the first mover.
Sure.
They're
Sure.
always the second mover in their tech, right? So
Yeah.
what do you see in Android, you get in Apple 2 years down the line. So they master it. So
Yeah.
but I've still got Coinbase. It's a strong holding. I think there's a value in it, and even if it went down to zero, it's not going to bite me. That's the value of my holding there.
Okay.
So that's where we are. It was
Okay.
yeah.
Well, I guess the main answer to selling, let's say Palantir, because I'm more interested in Palantir because I own it up here.
Okay.
Like
Okay.
my cost basis is 167. I bought it after the U.S. Venezuela global event we had a month
Yeah. Yeah.
ago.
Yeah.
So I didn't buy it on valuation. I think it's crazy expensive. But I think that it's got such a strong mode, and you even wrote a deep dive on kind of like explaining how Palantir has ontology, and that's really the spine to AI. I mean, everything else, there just is an LLM,
Yeah.
and Palantir has. It sounds like you still are bullish the company. You're just not bullish the stock price, today.
Yes,
Uh,
absolutely. I'm
yeah.
absolutely bullish about the company, right? I mean, if I take the math of Palantir, right? If I were to recap what I said, I bought Palantir in that $10 to $30 range when everyone thought it was, it was a mispriced stock because everybody thought it was just a government contractor with a PR problem, right? But by late
Hmm.
2024, it was already trading at 40x revenue, 80 billion market cap. At that valuation, the stock was pricing in perfect. And I even bought it at that price, right? Even at $80 billion, because even if you bought it at an $80 billion valuation, you still you'd have made, because I think it's about $350 billion now market cap, or 300.
Yep.
So
Yep.
it's 5x, right? Uh, so but I felt that even if it was priced to perfection, right? It was like,
Yeah.
it was compounding its revenue at around 30 to 32% per annum. The margin was expanding, to 40%. and the execution risk was really almost nil. That literally nailed down how they executed it, right? Uh,
Yeah.
so, but as an investor, what do we always think? We always, we're not just paid. We're not trying to own great companies. We need to own great companies at great prices, right?
Sure.
So my mental model was simple, right? At the time when I sold, it was roughly at around between 160 to 175 dollars a share is when I sold it. Its revenue was somewhere approximately around $3 billion or $4 billion. So that was literally, I think it was at one point it was more than 80 times sales, right? It was more 80 times sales.
It was over 100 times sales, I
It was a more
believe.
than 100 times sales. Yeah,
There's
it was
really
100 times
never
sales.
in history, there's never been a US tech stock
Exactly.
that I'm familiar with that had that
And, and,
price to sales.
and
Yeah.
and Alex Carr, amazing guy. Palantir, amazing company. No doubt that we will see a Palantirization of the world at some point in time. But right now, again, the question is, will I buy this at 100x? Right? No, I won't
Yeah.
buy. And for me, if this needs to justify this price at this stage, then what's the total addressable market for the enterprise AI ontology platform? It's got to be more than 150 to 200 billion, and Palantir should be capturing more than 50% of that market to demand this kind of a valuation, right? And
Okay.
there should be zero meaningful competition. If
Yep.
any of those assumptions were going to break, it meant it's a 50% downside. It doesn't look likely,
Yeah.
but I'm not prescient, right? We're not prescient to kind of we don't know who is building what where, right? They can suddenly appear on the scene and then they might just walk away with your market. Now, do I
Yep.
still believe in Palantir? Absolutely, I believe in Palantir. The thesis is still intact, right? In fact, it's more intact now because enterprises, if you read my agentic AI articles that I have shared, the 4-part series, the enterprises are actually hitting the wall that I've described, right? They've bought the AI tools, they're not working. That's creating an urgency for the Palantir model. But will they go and buy Palantir itself and to solve the problem? I don't know that. But I'm believing in that thesis doesn't just mean that I'll pay Palantir at any price, right?
Okay.
If
Go ahead.
so if Palantir pulled back to, let's say, $30 and $40 again at some point, then it would still be like, probably a 15-20x sales. I'd be a buyer again. At today's price, which is around 80, 85, is it 85 or is it more than 100 now?
Palantir's stock price is 134.
Yeah, it's 134. And if you look down at, if you scroll down to the overview, I think it must be 80x sales now.
Yeah, I actually can probably find that fairly
Yeah,
quickly while we talk. Yeah.
yeah, it's around
Well,
80x sales.
yeah, I hope it gets down to that price. I just don't know. I mean, I want exposure to this name because I think that it is one of the only non-consumer AI tech software companies out there. Like it's government and it's business, it's government, it's enterprise, it's not focused on ad sales. The QQQ is just ad sales, in my opinion,
Right.
practically. And
Yeah,
then
yeah,
you
yeah.
have Palantir there, and I think that's why Palantir trades at that premium. But at some point, valuation matters. I completely agree with everything you're saying. How would
What's
I
your
find
holding? I
this?
mean, do you have a big exposure to Palantir
Oh
or?
yeah, oh yeah.
Good luck.
I don't know.
And your entry
Um,
price was at what was your
my Yeah, I bought a little bit more. On the sell off, the software sell off. So I think my average cost is now like 165 per share.
okay?
Um,
And
and
what's your and
yeah,
what's your
eh,
thesis, Colin? What's your thesis?
that's exactly my thesis is that I think that there is a limited, there's demand for investors, not just enterprise and government, not just their actual software. I think there's a demand for the actual investor base that is looking for a company that is organically growing, doesn't need to grow by purchasing mergers and acquisitions. It's growing organically based on the 1,500 employees that are present at that company.
Mhm.
They only have 1,500 people working there,
Yeah,
and
yeah,
Salesforce has 67,000 people working there. I'd
absolutely.
rather own Palantir, But I think there's a demand for, like I say, like there's really only two companies that I feel have this government software moat, and it's Axon Enterprises, which used to be Taser here in the U.S., and
Okay.
then there's also Palantir. So I think that they trade at a premium just for that reason too. Here's price to. I think we have forward PS. Is this Palantir? Forward price to sales. PS ratio, you're right. You're in the 83 range, it looks like.
Yeah.
And then if you look at forward PS, which we don't have to, but for the heck of it, we can probably. Here we go. Forward PS looks a little bit still crazy. Next 12 months,
Yeah.
45 times. Yeah. I like the forward PE here at 100 still next 12 months. And that's based on them hitting revenue of over 7 billion. Yeah. Look, the craziest, most expensive company in the world, and I think it keeps a lot of value investors out, and I think that's also a positive too. I think it's if everyone knew that they would be doing 150 billion dollars in revenue a few years out, then everyone would own it, right? So
Yeah. And I think that's where you are applying the Bolton mindset, right? You're seeing a situation which probably I am not seeing, and
mhm.
you are looking at it as a company, and I liked your framing where you said, it's not an ad revenue business. It's a purely contract based business, and what it is doing for organizations is things that organizations never knew that they could do themselves. I think they also have a huge contract with the National Health Service in the UK.
Yeah, I saw that.
Yeah,
Yeah.
because the National Health Service is a basket case of systems. There couldn't be a better spaghetti of systems that the National Health Service has, and Palantir getting in there to unpack and the dark matter is definitely going to help health service a lot. So yeah, so for me, Palantir is going to stay. I love the company. I think what I'm watching for is valuation reset. If it pulls back to the areas that I'm thinking it can pull back, then I'll definitely be a buyer. Even if it drops below 100, I'll start buying slowly, right?
Okay.
Yeah.
Well, hey, that's a big difference than what you were saying, $20, $30 a share.
Even I'll start slowly entering it because it's nice to own that company. And the other thing I'm looking at is I haven't seen what's the succession plan for Carp, because it completely runs on his charisma, right? Are there the
Yeah,
next generation of leaders being groomed will be that visionary Carp like? Because I think what he brings to the table is a completely different corporate persona that you won't get in the standard S&P 500 companies, right? And
yeah,
and that kind of push is required for enterprises to transform.
yeah. That's a great point. And during the earnings call, they said at the desk, and there's the gentleman next to him that handles the government, and then there's a guy that B to G, and then there's the B to B guy. And
Yeah,
yeah, I mean, like you need to know both ends of this business. It's kind of diversified in a way. And the reason I actually bought it, to be honest with you, is because I didn't want to be sitting out on the next major geopolitical event like the last one, which
yeah,
was when they captured Maduro. I'm not saying I agree or disagree with what they did. That's a separate conversation. I just don't want to sit out on the next time that occurs. I
yeah.
want to be an owner of
Fair point.
Palantir when that occurs. You know what I mean? So that's actually why I owned it. That's more of the sports betting in me, is that I
Yeah,
think
yeah,
we're going to have a geopolitical event in the next year or two. It's going to be cyclical in that sense. And I want to own Palantir. And, there's a risk. Like, in fact, that capture of Maduro could have went wrong, and that would
yeah,
have looked poorly on Palantir, in my opinion.
yeah,
So there's a lot of risks involved, but that is why I actually bought it. And I kind of told myself, I've been looking at this name. I'm not going to wait. I'm not going to be a patient value investor. I don't care. So
So
stupid of me, but
maybe to just get the entry price right, maybe we should just wish for get one small thing wrong, Palantir, drop the price. You're a special
I'm
situation
happy to
again.
buy more. Yeah, I'm happy to buy more. Yeah. I think we should shift quickly to this whole conversation about the SaaS cannibalization or the AI disruption with these software as a service companies. Palantir is getting dragged down, and I think it has to do with the algorithms that are written around, Anthropic disrupting everything, and all these AI tools disrupting these um, legacy software businesses. This sounds weird to say; they're almost like
Yeah,
legacy. You sold Workday, is that correct?
yeah, that was I
Can you
saw.
walk us through why, how, when that all occurred?
So Workday, in fact, getting into Workday was it was a late entry into Workday. I entered Workday at around the 210 to 230 mark. I think that was when I actually plugged in with Workday, because at the time I was looking at, to be fair, I was looking at opportunities in the market, and every time I was opening up the career site of a Fortune 500 company or a FTSE 100 company, the one thing that used to keep coming was Workday. I said, So Workday has a lot of what do you call this footprint in a number of these companies, and it is almost literally running the HR processes and the HR system for these companies. So it's
Yeah.
the system of record. It's the agent. And then I thought, okay, if that is what Workday is doing, then and it was trading almost $100 below its what do you call it? Below its all-time high, and
Okay.
it was basically a application layer bet on AI, right? I thought, okay, this is going to be here to stay, because it is a system of record. This is a software that actually will use intelligence to make business run more efficiently. And while everyone was chasing the Nvidias and the chip makers, I kind of tried to be smart and cute, and I said I'll start building a position in Workday, because they sit on enterprise HR and finance data, and that's incredibly sticky, which it is. And once a company moves their ledger and employee data into the cloud, they very rarely switch. That's the general tendency. They're locked in for years to come. So
Yeah.
I thought this gives
Yep.
Workday a very powerful moat, and it gives a pricing power. Um, and my thesis again was that the next leg of AI trade was not going to be infrastructure; it's going to be monetization.
Okay.
So if you assume that Nvidia sold the picks and shovels, are still selling the picks and shovels of the AI trade, now the question is actually who makes the money using AI. And I thought, my thesis went around Workday with its new set of AI tools. They're going to embed AI into workflows. They're going to automate expense approvals. They're going to do predictive workforce planning. They're going to do intelligent recruiting. And as enterprise AI moves from pilot projects into production, I thought companies like Workday will see revenue acceleration and margin expansion. So all this, man, if you hear my language at this point in time, it's all I thought, I assumed, and I think I was a bit too quick in putting the money behind the till and buying Workday. I should have waited for a little long, but hindsight, hey. Uh, but then the
But
product,
could you have seen the SaaS panic sell
I
off
I I think
anyway?
I think I didn't see it. I didn't see it. I should have, and
I
that's where
didn't really see it either, to be
yeah.
honest with you.
Yeah. And that's
There's a
why I closed.
gentleman,
Yeah, sorry, go for it.
Jordy Vesser, that kind of saw it, and he's on Substack, and but his philosophy is more that it's going to eat away the Mag 7 type, hyperscaler type of companies like the Microsoft, the AWS, those type of companies. I don't know. He wasn't really specific about the Salesforce, Workday, Monday, those type of companies.
Yeah. Yeah, I don't know about Salesforce, but Workday, see, again, when I went back to going back to Workday, right, I continued using the product because I was, as I said, looking for opportunities in the market, which I still am. Uh, and as I was using its recruiting engine, right, I was basically, when you apply, you're going into the Workday platform, you're uploading your CV, and then you're filling out the form against the job specifications that the organization want. And as a user, when I was using it, it was very clunky. It's very
Hmm.
clunky, like it kind of remind me of a 2000. early 2000 administrative back office tool, not modern software. The UI, the user interface is very dated. The candidate experience is very poor. So, for example, when I upload my CV, it just doesn't pass the data in my CV very well, whether I do it as a document or whether I do it as a PDF. And then you go and see, like you didn't even capture the right dates and times of my experience here. You put it all wrong. And when it
Yeah.
came to the skills section, it just pulled out, some 100 or 120 random words from my CV and planted it as skills, as my skill. I'm like, hang on a minute, this is not how 2025, a software is meant to work in the year 2025, right? So
Mm-hmm.
what are they doing, Because in today's
Mm-hmm.
world, if you want to push agentic AI, in my world, what is Nirvana recruitment platform for me in the world of agentic AI, right? To be fair, it should be frictionless. You shouldn't be even you shouldn't even have a CV. You should just have a number of agentic AIs having voice conversations with you and literally on the spot telling you, like, listen, mate, fine. I've heard your 2-minute pitch. Here's the elevator pitch for this JD. You meet 25% of it. You don't meet the remaining 75% of it. Here's why. Thank you very much. Come back again. Right?
Yeah.
It should be frictionless. And here I was still typing in a CV, converting it into PDF, uploading it, and then again having to do everything back on the form and Workday again. So I said,
Yeah.
the product is also clunky. It doesn't look like they're going to do anything about this product in the near future. So how do I reconcile owning this stock while being critical of the product itself? So its moat wasn't product excellence, right? The product excellence isn't the mode of Workday. The moat is actually the switching cost for the customer is very high, and there's usually enterprise inertia. So if you take a company like, let's say, for example, a FTSE 100 company or the top company, let's say Eli Lilly has got Workday as its platform, right? And the whole HR process is powered by Workday. They're not going to switch from Workday into another platform overnight. So that switching
Yeah.
cost is pretty low.
There's
Uh,
regulatory compliance for the
yeah,
company. They've shared
yeah,
a lot of their
yeah,
information already.
yeah.
That's why, like, people are saying, why would a Fortune 500 company delete Salesforce tomorrow and use some Anthropic AI
Yeah,
platform? I still think it's a serious issue for someone like a Salesforce, a Workday. I think,
yeah,
I,
it is. It is.
and not only do I think that I agree that these companies may not delete their software tomorrow, but I think the company themselves have a headcount problem. They have too many employees because if they
There are too
integrate
many
AI
requirements.
themselves, there's a lot of white collar jobs out there that I'm afraid that are in trouble. And I know people that
Absolutely.
are in that industry and they're very concerned right now. And I think that it's going to first you're going to see the stock sell off, and then you're going to see job cuts, and they're not even going to. And it might not even be like they had to cut these people. It might just be to help to let shareholders know that we're making adjustments. I don't know.
No, it does. I mean, you're right. I think you're hypothesizing, you're thinking in the right direction there. And I think I tend to agree with you on that, Colin, because if you look at it, although, the revenue retention today is 95 to 100%, but that revenue retention is fundamentally based on, I've sold you 500 seats, so I'm retaining 500 seats, you're going to pay for 500 seats. At some point, the CFO is going to say, hey, what's all this agentic AI about? I don't want to pay you seats. I want to pay you on outcomes, right? So the
Yeah.
next time you come back for a contract extension on your software, I want you to give me a 30% reduction in the price. I don't know how you're doing it, whether you reduce the number of seats you charge me, and I want a 50% or 100% improvement in the outcomes. I want you to make sure that you're picking the right candidate for the job, or you're processing payroll on time, blah, 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 whatever your metrics might be, right? So I
Yeah.
eventually kind of bit the bullet and said, after a 20% drawdown, I said, okay, there's an opportunity cost here. And I don't know. The SaaS sell-off really triggered everything. It knocked me off. I wasn't expecting it, but really that was like the trigger. And Workday's return on capital was pathetic still. The yield was less, and it was still sitting at I don't know, maybe a 25x or a 30x of its revenue multiple. And I think, okay, it's still trading at a premium. There's a lot of fear here. I succumbed to the fear and uncertainty, doubt, the FUD, and I said, okay, I'm going to liquidate my position, and I'll keep a close watch on it and see. And that's why I wrote those pieces, right? What I'll be watching for in Salesforce, what I'll be watching for in ServiceNow, and what I'll be watching for in Workday. probably think Salesforce and ServiceNow may have an edge, but even Salesforce, I'm not so sure, right? Because uh, we can get into Salesforce. That's a whole new conversation. Even they are similar in
Yeah.
their data model and in their architecture, similar to Workday, but they solve different use cases. And these platforms were all built for the human being in mind, not agent in mind, right? Agentic AI operates on a completely different concept, right?
Yeah,
It
that's
operates
that's a
completely,
really important aspect of this
yeah, it's a complete,
because yeah, if you're you what was that one? I think I posted it the other day. I'm gonna go find it real quick. How it's like AI agents and SaaS, and how there's like going to be an overlap in 2028 per Gardner at Goldman Sachs. Darn,
yeah.
where is that picture? But you know, a lot of people that are making these custom AI, they're running these like they're kind of integrating Anthropic with like an open claw, for example, so things can run overnight. You know, I think some of these small businesses are trying to be vertically integrated. They're bringing it in house, so they're not like renting out a server or whatever. Um, and
Absolutely.
and they're like ending up having to buy like more Slack accounts for what they're trying to achieve. So like oh, is this like actually going to help Salesforce? You know, but I think it's a little too soon to really know. And I don't need to own Salesforce. And personally, I think Salesforce has too many people there. Although I
Yeah.
don't
And
live there and I don't work there, it's hard for me to say that. But it's just I rather own AppLovin or Palantir, which are software companies. They're not, you know, AppLovin's not SaaS, but they're in the same world and they only have like 1,500 to 3,000 employees there. I'm
oh,
attracted to these lean software companies. I feel like they're built for the future of where software is going. But I'm gonna find
yeah,
this.
I mean, I get it all. I think I need to look into Apple, and that was also on my radar, but I've never got deep into it.
They
Maybe.
report tonight,
Oh, is
and
it?
yeah, they report today.
But
Yeah.
when I was owning Workday, it was my feeling was like betting on you know Novak Djokovic, who has great fundamentals in tennis,
Yeah.
but he is declining speed, right?
Hmm.
He has the skills, he has the experience, he has the infrastructure, but when you're competing against younger players like Yannick Sinner and Carlos, right? You can't bet on Novak Djokovic, however good he
You
is.
know your tennis pretty well. Did you watch the Australian Open? Mhm.
No, I'm a big fan of Wimbledon, and
Yeah.
I try to get to Wimbledon. I apply for the public ballot every year. I've been lucky 3 times.
Nice.
And yeah, I do try to, but the Wimbledon 2 weeks, it's me and my wife
That's great.
glued to the television, or we go out somewhere where it's on a big screen and enjoy it. It's a great atmosphere.
I completely agree. I come from a tennis family. My whole family
Oh
is very
wow!
into tennis. Yeah. Do you see what I'm sharing right here? It says the profit pool in software is
Oh
expected to
yes,
shift toward AI agents. And then there's this chart where it shows it shifts in total addressable market TAM for software as a service versus agent TAM.
yeah.
Um, wh- you know, I'm kind of throwing you a loop. It's not like I told you I would be asking you this question, but what does this show you? And can you explain it to someone to me that's not very tech savvy? What this you think this means? It
So
says, but
so basically, I mean, as the name suggests, right, that this is a bit of a prescient graph from Goldman Sachs, right? I mean, what they are
yeah,
saying is uh, Workday, Salesforce, and ServiceNow over time, they will have to cannibalize their seat-based revenue with an agentic AI tokenization agent model revenue, right?
okay,
They need to move into that space pretty fast. But the challenge that they will face, that will come, the reality is, how do you price it? What do you price it on? Right? What it in to a CFO today, you can just go and say, right, I've got 500 sales executives. Each one of them needs a Salesforce license. Each executive tracks 10 prospects or 15 prospects, and they convert. Our prospect conversion ratio is 1 in 15. And then once they convert a prospect into an account, then the account will have multiple opportunities. And Salesforce helped me track all of that. And it takes me through the life cycle of prospecting to account to then billing to opportunities to projects and to billing, right? That's what Salesforce
Hmm.
does. And the pricing model is pretty simple. You just say you first buy the basic database, and then you buy the UI features on top of it, and then there's a license per seat. There's a standard license per seat, and then there's any add-on to it. If you want to add Agent Force, you want to add Einstein onto it, then either it comes as a wholesale number for 100 sheets, you'll get Agent Force free or whatever. I don't know how they price it. Now,
Hmm.
that's the typical SaaS TAM, right? It's very easy for the CFO to understand. Yeah, I get it. But when you're saying tokenization, addressable market is now going to be 50 billion, is going to rise up to 50 billion.
Hmm.
And how are you going to price it, right? I think that's the challenge that they'll have. The CFO will not understand, right? You know what? We're going to pay 0.0025 cents per token. It's like, what do you mean token?
Hmm. Hmm.
Right? I think I've not seen the math behind the actual agent TAM, target, total addressable market that they're talking about. But
Hmm.
the agentic AI, either they can just say, the pricing model could be as simple as, hey, listen, we're just going to deploy it could be a mix. Instead of paying for 500 seats, you will just say, right, you know what, I know you've got 500 salespeople, you don't have to pay for 500 salespeople, you just have to pay for 50 master licenses,
Hmm.
and then you'll get unlimited number of agents for 50, or you'll get
Yeah.
10 additional agents per seat, right? Something like that, some model like that.
Yeah.
And what they will try to bolt on into that is they'll probably inflate the price of a seat, reduce the volume that they're going to charge you, and
Hmm.
then they'll refill all of that with agentic AI, and I think that's the model they'll probably try to go to. And I think at that inflection point somewhere in 2026, I don't think they're there yet, where it shows
Yeah.
that divergence.
Are, are you
And agentic.
familiar with Agent Force?
No, I've not personally worked with Agent Force as such as a user, but in on the organizations that I worked,
Hmm.
they were trialing Agent Force and very badly.
Okay.
Either they didn't know what they were trying to do, or they, because Salesforce. The other thing is, what people don't talk is, I have seen CIOs lose their job after ServiceNow implementations. I've seen CROs lose their job after Salesforce implementation. I've seen HR managers and CEOs lose their jobs after their Workday implementations. So implementing these softwares, they're not easy. They're very complicated. And if in one of my articles, I talk through that agentic, the 6-layer archaeological dig that organizations have in their enterprise stack, right?
Yeah.
These platforms have to navigate a number of walled gardens within those. Eventually, if you look at and that is why it's quite difficult to take that Goldman Sachs and say something is going to happen, because if you look at how organizations operate, and maybe you might have an experience in this in your organization, behind each prospect or behind each account in Salesforce, I'll bet there'll be a cottage industry of Excel spreadsheets sitting in the background doing a number of different things. So the account manager will be taking and doing a pricing code within the spreadsheet.
Hmm.
Then the project manager for that project will be taking and doing some estimation around what is the professional services charges for it. Then somebody in the finance department will be trying to model the different revenue streams and at what price, what discount we can give. And eventually the final record in Salesforce will be the only contract. But what is happening behind the contract, all those multiple cottage industries of spreadsheets and PowerPoint presentations, is lost in Salesforce. They don't come there. And that's
Hmm.
what Palantir tries to do, right? That's the
Yeah.
dark matter that their forward deployed engineers go and try to see. They don't go and see the system of record. They say, what do you actually do as a person? Forget the system of record. I can see Salesforce, but behind Salesforce, there's an army of, there's a deluge of different tools that you are using to get to the decision of make this sale at this price or not.
Gotcha. Got you. Yeah.
And that's the challenge. I think that agent TAM probably needs to hit the dark matter first. And if
Yeah.
Salesforce solves that, right, where Salesforce and ServiceNow can say, no more spreadsheets, no more PowerPoint presentations. You can walk into a room with the CFO, open the Salesforce console, talk and let the agent talk you through the sale process or talk you through the sale completely. And through that, all you need to do is the CFO in the meeting room can just press the button there, approve, posh, it goes to the as a code.
Yeah, hey, what's the point of a human anymore, you know? I mean, you don't even need you don't even need the CFO at that point. That's crazy. You know, like you would laugh because I was in advertising sales for a brief moment after college, and then I started working in commodities or in the company I was telling you. But you know, we used ACT database for
Okay.
our CRM. Are you familiar with this company? I think it was starts with an S. The company was I can't remember, Saga, SAGA maybe. But anyway, I don't even think they exist anymore.
Okay.
So yeah, so I started working at this my new company, and I was like, oh, I'm familiar with Act. I want to use Act, and I don't use any CRM, and you know, because I can't explain it, but we could use you to come in and help us get our life together here at this company. You know, because we don't know what we're doing in terms of tech or CRM, and we're a sales company, and we should be, you know.
Yeah, yeah.
Um,
It is. What do you use, by the way? I mean, and for
I
now,
use well, we have 365 Microsoft, and that's
365.
it. I use an Excel spreadsheet for some of
Excel
my
spreadsheet. Yeah. You know
yeah,
what?
it's sad.
Sometimes, right? Sometimes, for I don't know what's the size of your company. So,
20 employees.
20 employees. So it's a small size company, right?
Yeah,
In terms of even revenue, would you rank it as a micro company or an SME or
micro.
micro company?
Yeah.
Don't overthink here, right? I mean, sometimes a spreadsheet is the absolutely right solution.
Yeah, it has been.
You don't have to overthink it because you if you get locked into a software like Salesforce or Monday.com or anything like that, right?
Yeah.
You're like one you it won't it doesn't work to your process.
It doesn't. To be
You
honest with you,
you
I'd
you have to
rather.
change your process
Yeah,
to make it work for you, and even then, it's not fully optimal to serve your business need, right?
correct. Yeah,
Yeah, because if you're saying I'm going to pay 300 quid or 500 quid a month or let's say $10,000 a year on Monday, you're
yeah.
expecting, right? Well, what value am I getting for $10,000? It's just that my people, instead of typing everything into a spreadsheet, are typing into Monday, and then it gives me a nice dashboard. Is that the saving? But that
Mm,
dashboard is not telling me anything because after that gives the dashboard on Monday, I have to download that image, put it on a PowerPoint, and put a caption to basically explain myself to the to my boss.
right.
Then what's the point, right? So sometimes I feel people sometimes over engineer.
Yeah.
And I think if a PowerPoint presentation and a spreadsheet is working fine for you for a 20 minute, I think you should just stick with it and just see how you can increase sales and how you can sell more or how you can
I
rather
think
spend money on that.
what I think would be more valuable is if I used Claude, not for not for what's it called, desktop co-work, not for it to actually do things like that on my computer, but just to
Yeah,
be my working agent, like, you
that's
know, to
fine.
help me with my
Correct.
sales process, you know.
Correct. And with Gemini, right? I think I don't know whether I think Gemini. Sorry, Google Sheets.
Yeah.
See, earlier you had to be a wizard in Excel to kind of do pivot tables and complicated macro analysis and bring data together. But now I like the alphabet story, the Google story, because they've made everything Gemini first. So within the spreadsheet, you've got Gemini as the AI agent. And then see, whenever I put, so earlier when I used to do, I should show this to you if I can, I'll demonstrate it. So when I'm calculating enterprise value over time, I tend to use the average share price for the year, right?
Okay.
So how do I compute the average share price? I go to Yahoo Finance or I go to TradingView, take a dump on a CSV of the monthly high, low, and mid ranges. I
Yep.
don't need to daily. I just need monthly because I'm doing it over a 15-year period. And then I just then I have to, after I download that CSV, then I have to build a pivot table to basically summarize the data at, okay, give me for each year, the average high, low, and close, right? So that I get, if I'm doing it from 2015, I just need 10 rows of values, but I needed to do a pivot sheet to do that. Now I can just go into Google Sheets, get the downloaded data, and then talk to Gemini and say, do this for me. And it'll just give it to me in a table.
Yeah.
Then it said, do you want me to insert this table into your spreadsheet for further analysis? You can say yes or no, and then off it goes.
Yeah.
So, what used to take 10 minutes to build the pivot and run it and make sure everything worked, it's now
Yeah,
just a
that's
prompt.
crazy. Yeah.
It's just
Yeah.
a
Are you
prompt.
using discounted cash flow analysis through any AI tools like that, or are you not doing DCF
Uh,
or?
so discounted cash flow. I don't do discounted cash flows much. That's not, but I do use them for deep research, right? So it's basically spreadsheet. So on my spreadsheet, if you want, I can share my spreadsheet. If that helps, I need to open up my spreadsheet. Let me
Yeah, I
do
think I have to give you access. Last time this didn't work, so just allow all participants to share screen. Yeah. While you look for that, I'm gonna take a quick break for a second. I'm gonna just put it on pause. Okay.
No worries. I'll also
Okay.
switch off my video for some time. Don't worry.
Okay. Hold on.
Okay. So my simple scorecard, which I use, I don't go too much. So I go through the 10Ks. That's my go-to document. I don't look at anything else. I have a very simple metric. I don't overcomplicate it. I only go deep into management commentary when I need some input somewhere. So this
Mhm.
is just, I'm building out Netflix, right? I'm just building out the model for Netflix. So I start with shares, right? And where I was saying is the average share price. This was the computation that I want to do, and I'll get back to it. I just do a bit on scale, profitability, and cash. Then I do a bit on balance sheet and capital employed. I try to see what the return on capital is, right? And for me,
Mhm.
return on capital should be improving. It should be greater than 15 or 16%. Then it makes sense. And for me, Workday was not giving me that. And then there's the market valuation and enterprise value, etc. And then I use that. Then basically what I do is, I just ask AI when I want to do discounted cash flow. I'll just say like, this is the number, and I'll just talk to it, and I'll say like, use these.
Which AI do you use for this? Just
I use all four, right? I use
yeah.
Perplexity, I use Gemini, I use Claude, and sometimes I also use Grok. And I ask the
Hmm.
same question to all of them. Give me
Hmm.
the same prompt and see what does each one give, right? Sometimes the answers are,
Different.
mathematics typically, okay, if you specify the boundaries, they'll come with the same number almost. But if you ask them to use their imagination, like, go and find out what was the latest free cash flow and then do this on that, then you probably sometimes you get different numbers. But the Google Gemini task that I was about to say was in this sheet. So when I want to compute the average share price for that particular year, I typically I'll go and download this raw data
Hmm.
from somewhere, from TradingView or from this one. Now, if I were to get an annual rate on this, right, I would have to go and say, hey, I'll have to insert a pivot chart, a pivot table, and then drag and drop columns and then summarize it, etc. But if you look at Google, they've got Gemini built in, right? Gemini is their AI tool. So you just go and say, summarize this data, Gemini comes up. And then you just say, hey, it tells you what it does. It does a basic this one. And all you say is, I want an average open, high, and low price by year. Hope it works. Typically, it doesn't work when you're demonstrating something,
This is cool.
right?
Even if
There you
it
go.
doesn't work, I'm like so impressed right now.
Yeah, see, there you go, right? Quick.
Wow.
And then it says you insert. It'll say, oh, you want to add it to a new sheet or you want to override the data? Add it to a new sheet. And there you go. You got it.
Oh my gosh. That's cool.
Yeah. So Gemini, I don't know whether Excel does this. I stopped sharing my screen, by the way.
Yeah.
So I don't know whether Excel also might be able to do this. I think Copilot does it, but I think Gemini, I think Google is probably the winner takes all
Sure. Yeah.
model year. I think they're going to get it.
Yeah. So we before we did this call, I tried to get Anthropic to give me an agenda. They gave me a 11-page agenda. We got through maybe 1/20th of it today. So you
Fine,
definitely need to come
fine.
back on.
Yeah, definitely.
Um, I kind of just want to get to kind of like conclude the podcast today. Um, Kind of get an idea on just like this is kind of like a flash round. Like I'm going to give you a sector or an asset or a stock, and I kind of want to get your feel on how you feel about it today. You ready?
Yeah.
All right. I think you own the India MSI. Is that correct? Or their Nifty 100? Is that correct?
50-50, yeah, yeah.
Okay. Can you tell me, are you still bullish India as a country, and what percentage of the portfolio is India, this index fund, and kind of give me like your bird's eye view on India right now.
Okay. Very interesting question, right? But I think I'll try to lay this land for India, because for the Western investors, in India is a black box, and I think we need to understand where India is today to understand the market. The Nifty 50 index is basically the top 50 companies by market capitalization in India, similar to the Nasdaq 100. You have the
It's
Nifty.
equal weighted, correct?
Yeah, it's equal weighted. I've equal weighted it, and I'll tell you why I equal weighted it. Now, before I get into it, why India, right? One, I was born and brought up in the country, so I understand the country. But I think before, for Western viewers and Western investors, I think you need to understand the demographic setup, right? What India is economically today, because for me, I see India as not one country. It's kind of 4 or 5 countries stacked inside one border, right? And I'll say let's talk it from the beginning, right from the top of the pyramid, right? I call it the Luxembourg or the Monaco layer, the really, really top 1-2% of the country. You have roughly around 15 to 20 million people. That's around 1.5 to 2% of the population, who live like they're actually living in Luxembourg or Monaco. They are ultra high net worth individuals. They are C-suite executives and multinationals. They're very successful entrepreneurs, Hollywood, Bollywood stars, cricketing icons. I don't know whether you know cricket. It's an Indian religion.
No.
Yeah, it's similar to baseball.
Yep.
Yeah. Their household incomes would exceed anywhere beyond $1 million annually. And that is at the lower end. They'll be like billionaires, right? They'll buy imported German cars. They will live in gated communities in big cities like Mumbai and Bangalore. They will send their kids to international schools. They'll vacation in Dubai, London, New York, Paris, and they'll drive the luxury consumption, right?
Hmm.
And that 1 to 1.5% of the population on what do you call, what's the Indian population? It's 1.5 billions, right? So
Okay.
that's 1% is nearly 10 million, as big as a Luxembourg or a Monaco in terms of size, as big as a London, right?
Yeah.
The next layer is what I call the Germany, UK, European layer. That's the next 8 to 10%. That's around 100 to 120 million people, almost 2 times the size of United Kingdom, or 25% the size of America, who live middle to upper middle class life, right? And they are comparable to people who live in anywhere in Europe or the upper middle class in the US. The household income would range anywhere between $15,000 a year to around $50,000 a year. These are IT professionals, doctors, kind of mid-level managers, small business owners. They are buying their first cars, they're taking domestic flights, they're upgrading from motorcycles to SUVs, they're installing air conditioning, they're buying modern fridges, they're sending kids to private schools, but not international schools. And critically, they're all embedded into the formal financial system. They're opening brokerage accounts, they have the Indian version of the Robin Hoods, they're trading stocks, they're buying mutual funds, they're buying life insurance. And that's the aspirational class that's slowly formalizing in the country. Yeah.
What
That's
percentage of this
that's around 8
pop?
to 10% of the country, right? Around 100 to 120 million or 150 million, give or take 10 million, right? There's so many people in India. The third layer is what I would call the United States layer, or the North American layer. You have around 300 million people here, a country the size of America in India, who live working class to lower middle class life, around $5,000 to $15,000 annually. That's roughly around 20 to 25% of the population. These are the blue collar workers. the factory workers, the shopkeepers, the skilled carpenters, tradespeople, clerks in government offices. This class is slowly moving from a subsistence-based economy to slowly they're consuming, right? They're buying their first refrigerators. They're upgrading their old Nokias to a smart feature phone now. They are switching from public transport to a two-wheeler. They're buying a small flat in a tier 2 city, right? And this segment kind of drives the mass market consumption in India. And the products in India you get. So if you went into a Walmart or if you went into a supermarket in UK, the minimum SKU size or the pack size you get is like, 500 grams, half a kilo or 1 kilo, right? You get big packs. In India, it's micro. You will get 25-gram packs of the same thing. You'll get 25 grams of a surf powder. You'll get 25 grams or 50 grams of, a curry masala powder, which drives consumption in that sector. Then there's a fourth India, which no disrespect, but I call it the Africa layer. And at this base, you kind of got around the bulk of the people, 800 to 900 million people, whose living standards are like probably compared to sub-Saharan Africa. Their household incomes are below $5,000 a year. Some live on less than $1,000 a year or even below. And this is the agricultural sector, the unorganized labor market, predominantly rural population. They're not at consuming discretionary goods. They're still fighting for the basic necessities like food, clean water, electricity, sanitation, etc. But the critical point with this sector is they're all aspirational. They're seeing the above strata moving up, and their aspiration is to move along with them. And there's a kind of formalization happening at that sector. So when I'm saying the big companies, the Fortune 100 companies are building products that these people can consume, they are slowly getting into the formalized company, right? So the math stacks up for India. It's a long-term play. It's overvalued by any stretch of imagination. The market is overvalued, but it's a long-term play. So basically, what this converts into is per capita of around $2,500 to $3,000 in GDP, but in 2025, and every doubling of the $2,500 or the $3,000 is just going to drive consumption, right? And that's going to happen over the next 15 to 25 years. So now the Nifty 100 or the Nifty 50 equal weight index, what it does is it's constructed to give you exposure to that entire economic pyramid, right? Not just the top. It's a traditional market cap weighted index in India will be very much weighted towards banking sector and financial sectors, whereas the equal weight diversifies that and it gives you everything. So if you were to break it down by those layers, the luxury sector, then the semi-luxury sector, then the subsistence sector, and the below consumption sector, right? If you take the top tier, in the Nifty 100, there are companies that are like, that do automotives and SUVs. A company called Mahindra and Mahindra, they make premier sports utility vehicles for the country. Then there is a jewelry company called Titan, which owns India's largest organized jewelry brand called Tanishq, right? And then there's finance company which does premium wealth products. So that lies in that Nifty 100 index. That serves the luxury layer. And if you take the second layer, there are the big banks of the country, like HDFC Bank or ICICI Bank, and they are banking the country, left, right, and center. And then if you take the mass market consumption layer, you've got big conglomerates like ITC, which is a cigarette brand, makes a lot of money out of cigarette, but it's diversified into into serving almost everything you would want. There are companies, I call them as the cradle to grave companies, right? There are conglomerates like Tata's and Reliance where, you can almost live your entire life buying products from them. Like, so for example, with Tata, you can be born in a Tata hospital, cradle, right? And you can buy a Tata home and live in a Tata home. And you buy Tata steel to build that home. You buy groceries from a Tata store using the Tata brand. You buy jewelry from Tata in the form of Tanishq, right? And then you go and when you die, you get burned in a Tata crematorium, right? So cradle to grave, there are companies that offer this entire layer of services. And then deep inside, there's also the infrastructure place within the Nifty 50, right? The petrochemical industries like Reliance Industries, the power grids, the commodity exchanges, etc. So my split about India is broadly divided into the Nifty 50, which is equal weighted, which gives me an exposure to the entire pyramid. Then one of my best holdings in India is actually not a tech company or not a this one. It's actually a company called Coal India Limited, which has done really really well for me since the past. I've been holding it since nearly 6 years now, and it's 4x now, and it gives amazing dividends. Basically,
Nice.
I bought Coal India because I thought the whole world was changing towards climate change. Coal is bad, fossil fuel, blah blah, all of that stuff. But 65 at the time when I bought it, 75% or 80% of India's power needs were met by coal. And India's power needs is just going to grow exponentially. And coal has a role to play in India for at least the next 50 years. Even if the power mathematics changes, right? Coal India will still
Hmm.
be there to generate that electricity. Because today, even when we said we've achieved 100% electricity, I think 60% of the country, that definition of 100% electricity is that all homes at least have one light bulb that they can light up. So nearly 50% of homes just have that one light bulb that lights up their home. They're still yet to buy their first washing machine. They're yet to buy their fridge. They're yet to buy their dishwashers. They're yet to buy their vacuum cleaners. They're yet to buy their smart TVs. And all of that is going to consume power a lot. And Coal India is going to be there, serving that power need. And then I've also invested a small portion of it in a small cap fund from Franklin Templeton, which has exposure to some of the new niche plays in India. So, for example, there is a Pepsi bottler in India, and they've got a monopoly
Okay.
Pepsi bottling in the whole of South Asia. So there was some of them are no-brainers. You can just buy them and hold them.
Hmm.
But that's the exposure. We can dedicate a 10 series podcast to everything
Yeah, I
India.
would like to learn
But
more.
yeah,
Is this the ETF, NFTY?
that Nifty 50 equal weighted, it's first trust exchange. But since I have got an Indian account, I'm able to open an Indian ETF, which I bought from India. But
Gotcha.
yes, this would be tracking the Nifty 50. It'll be the same.
Okay. Yeah, and
Yeah.
it's all equal weighted. I
Yeah.
see. It's not price weighted, it's equal weighted.
Hmm.
Okay, cool.
That's
Good.
a helicopter view of India, if you like.
Yeah,
I
no,
don't know if
no, that's cool. I figured maybe it was better for me to buy a market cap weighted index India fund, but I don't know anything about it. I'd have to do research.
but it I would say it is overpriced today. But I think if you're dollar cost averaging it, doesn't matter.
Yeah, yeah,
It's long term. India has got a long runway to go.
yeah,
The
it
the
does.
big risk against the Indian investment is geopolitical risks, and if the country implodes itself under the weight of the geopolitics that's happening around us, right? That's the biggest risk. I don't see that risk materializing at this stage, but
Okay.
who
Yeah.
knows?
Interesting stuff. And you are not invested in China?
Not now.
Okay. And you're invested in some of the crypto space still. So I think I said that it looks like you still own like Bitcoin. Is that correct?
Yeah.
And are you having second thoughts on
No. I think they're very very minor positions. They're not.
okay.
They won't make me I won't lose my sleep over it. I think gold is definitely a big part of my holding. It doesn't come with any intelligence. Indians love gold. We own gold. Simple, right? It's like
Yeah.
there's no super genius involved in this. Just buy gold. If you have spare
Yep.
cash, if every woman will just go and buy gold in India. That's it.
Yeah.
Gold has done well for us this year. And I think there is a world for tokenization. I'm not altcoins. I don't even bother to think about them. I think Bitcoin, Ethereum, I think they are the place probably. I think there is a world where you know there will be requirement for an alternate form of currency. I think the thesis is still there, but the
Mhm.
position is so low that I won't, I won't be wiped out if that positions went to zero.
Okay. Yeah, that's good to know. Well, you'll see. I think you subscribe to my Substack. You'll see I'm a big Bitcoin guy.
Yeah,
Probably.
I would love to hear your thoughts on Bitcoin. Why don't we do this? Maybe the next
Yeah,
podcast is like I talk to you
yeah,
and I
absolutely.
understand your thinking. That would be amazing.
Yeah, I would love to do that. I would love to do that. Yeah, and we can talk about uranium and even go dive more into gold as a hard asset. But yeah, I think that you got to come back on in like a week or so. And I like that idea of maybe doing like it's kind of like a series, but there's so much news happening every day that I would like to have you come on more consistently, and we can talk about current events and stuff too,
Oh, it's
and
fantastic.
whatever's on your mind, whatever you're looking at. And it's kind of another outlet for you to share your ideas. And of course, uh, I think that a lot of people in Substack write newsletters, and we sometimes want to hear your voice. We want
Absolutely,
to
absolutely.
we want to hear your voice too on it. It helps.
Yeah, enough of being
So
keyboard warrior.
yeah, we're all keyboard warriors all the time, all the
Yeah.
time. Thank you so much for coming on. And we can find you where on Substack?
You can find me on Substack. I'm not very active on Twitter. I'm on LinkedIn, and yeah, and if you're happy to connect, I'm happy to share my email address. I was thinking of starting a chat group and stuff like that, but then I thought, let's see.
Sure. Yeah, I
Let's
like
build
that
a
idea.
track. Yeah,
The newsletter is Alpha Monk.
is Alpha Monk? Yes.
Okay, great. So please subscribe to Alpha Monk. This way, it gives Satishan more motivation to come back on here so he can see it was worth his time. And thank you so much for coming on. And um, any last words?
Thank you so much, Colin, for having me on. It was a real
Of
pleasure talking to
course.
you.
Yeah, it was a lot
I
of
think the
fun.
conversation, I learned a lot from this conversation, and I look forward to many such more in the future.
Same here. Have a wonderful night there. Okay.
Okay, take care.
Thank you.